Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We are going to start this week off by bringing you information on a couple of more Zacks #1 ranked strong buy stocks. Not me, our strategists who are here with me at the desk, Ben Rains and Nina Mishra. Rarely do we have two strategists here at the desk, so we're going to take advantage of this opportunity. And for people who like to watch television, maybe unconventionally, you're going to talk about Roku.
Well, yeah, it's soon going to be maybe the conventional way to watch TV, and that's why Roku looks so strong. It's really one of the only pure play streaming TV companies aside from Netflix, which is the giant in the industry. So they allow you to watch Netflix, Amazon Prime, Hulu, all those other streaming services you know of. And I quickly want to just go take a look at their website because it gives people a sense of really what's going on. So you'll see they have various products. So we'll go to their streaming players. They sell a range of 4, offering kind of different levels of things, but from $30 all the way up to $100. And then you can also buy a Roku TV, which is that same ability to watch streaming services, other things like that, with it just built into a various TV. They don't make the TVs themselves, but they license their software and hardware to one of these various TV companies, as you can see on here. But then a big part of their business going forward is their ability to get advertisers in front of these consumers who are becoming harder and harder to reach in an age where people are basically spending all their money on either Google or Facebook for advertising. So that Roku ad business is big. Its platform revenues are up 86% last quarter, with revenue itself up just 60%. So that's that big growing business where it's allowing marketers and advertisers to get in front of people. They're also selling sponsorships, so saying, hey, you might like this X ad or this X company, maybe you'll buy their streaming service on there. So that's a big part of their business going forward. And then I quickly want to look ahead at some of their outlooks because it's a growth company for now. So we're seeing nearly 50% growth this quarter, 39% growth that next quarter, 47, maybe 46 for the full year, and then another 34% growth that following year. On the earnings side, it doesn't look as pretty, but they're spending on international expansion and other forms of growth. So people aren't really looking at their earnings just yet. It's a growth stock for now. No one should really consider it anything else. And we can see, though, however, that they've been crushing their earnings estimates recently. But then another big reason why Roku looks pretty strong at the moment is that it has fallen recently. The stock's down about 30%. And this is after some news came out that Comcast and Facebook were releasing some devices that are going to be similar to what Roku's offering. But Roku's already the #1 player in the space. Apple is a competitor, and they're already bigger than Apple, Amazon, Google. So people aren't that worried, and now they think that a big reason why they look so strong now is that they're down from where they have been. So we can see the stock's really been on an insane run over the last 2 years.
Yeah, but still it's up by triple digits,
yeah.
right?
So it's still, they're down 30% off their highs, but their highs are impressive. So they're up about 100% over the last 12 months and then already 300% in 2019. But with that fall over the last month or so, that 30% dip could be really a great place to buy Roku now.
Okay, great. Roku, you're welcome for the free pitch, by the way. Nina, you've got a company, an online direct sales company, JD.com.
Yes, so talking about another beaten down stock. Chinese stocks were beaten down recently, in fact, over the past 1 year because of trade war concerns and slowing global growth. But last week, US and China arrived at a limited trade deal, which we can call phase 1 of the trade deal. And according to President Trump, talks are going very well, and there is more optimism regarding.
But the news out of China this morning is that their reaction seems to be somewhat muted, right?
Yes.
So there's another side to that.
Yeah, so we will have to wait and see. But these Chinese companies which were beaten down because of trade war concerns, I think they are worth a look because of their longer term growth concerns. Growth prospects, sorry. So JD.com is the largest publicly listed retailer in China, and Alibaba is their closest competitor. And while Alibaba has an asset light model, more like eBay's. JD's business model is more like Amazon's. They have their own inventory and their own self-built logistics. So they are like the Amazon of China. And they have been investing a lot in technology, and they are investing in drones for deliveries, smart warehouses, and everything. And after a period of restructuring, the second quarter results were really good, which were reported in August, I think. And if you look at if you go to the quote page and look at detailed estimates, you can see that estimates for the current and next year have gone up significantly after those results. And China's population is more than 1.4 billion. And of course, a lot of people shop online over there. So e-commerce is growing. People shop on their computers, on their smartphones. And so this is a good play on rising middle class in China, whose incomes are growing and who are shopping more and more online. Now, if you look at the stock, it's a Zacks rank #1 stock, as you mentioned initially. It has B for value, A for growth, B for momentum, and A for VGM. So I think it's definitely worth a look.
And they have an earnings report due out soon?
November.
November,
Yes.
which is not that far away.
Yes.
Yeah, right.
Yeah. Gee, time's moving on here. So do either of you own either of these stocks?
I do not.
I do not know.
Okay, but you're going to buy a unit after
Hey,
we
why
get off
not?
the
Yeah,
air,
right.
Thanks for the information, and don't forget, always more information on our website, Zacks.com. Get on over and check it out with Ben and Nina. I'm Terry Ruffalo.